Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's Matthew Kidman, and today we're going to talk about all those stocks we've been trading like maniacs over this really incredible year. And to help me discuss that, Steve Johnson from Forager and Ben Rundle from NAOS. Ben, we'll start with you. It's been in the news. All their shops are closed, but the stock's gone crazy. Flightcentre, buy, hold or sell?
Flightcentre's a sell for me. So given the money they raised during the crisis, the enterprise value of the business at the moment is actually higher than it was pre-COVID. I think what investors are missing with Flightcentre is that the majority of their earnings actually come from the corporate side of the business, and that corporate market I don't think is going to recover as quickly as what everyone thinks. So while the leisure market might be full and everyone's piling into airports to go on holidays, I think they're overestimating the benefit that Flightcentre will get from that.
They raised a ton of cash right at the bottom. Share prices bounced. Buy, hold or sell, Flightcentre?
I'd agree with the sell on this, and I think the bull case might be, well, as this business recovers, all of that working capital comes back into the business and you can give the cash back to shareholders. I don't think anyone's going to look at it again and say we can run this with negative working capital because of what happened in the crisis. And I don't mind the business. I think it's got some long-term issues, but again, I think the share price recovery is fully pricing in the recovery that is going to come, but it's already priced in.
We've learnt this year that data's more important than food. Data centres, NextDC, buy, hold or sell?
I'm a sell on this one as well, and that is a view around interest rates rather than anything else. I think you should think of this stock as an infrastructure type stock. If you think interest rates stay near zero forever, then a 6% return from a NextDC might be attractive to you. It's not attractive to me.
Ben, data, it's everywhere.
Yep.
It's incredibly important. We can't live without it. Very expensive stock.
It is
defensive stock. Buy, hold or sell?
Yeah, look, I'm going to go the other side and say it's a buy. And Steve does make some good points, but I think if you look at the business currently, their second generation centres are adding capacity. They've got about 17 megawatts of contracted capacity that's not being built yet. And then their third generation centres, they're just starting to build as well. So I think that with the incredible demand that you're going to get for data, I don't think they're going to have trouble filling that capacity, which will drive earnings, and I think that'll continue to drive the share price. But look, it is expensive, but I think it's still a buy at the moment.
Okay. Been terrible trying to sell stuff in China this year. It's just flipped on its head. A2 Milk, struggling, used to be a darling. Yep. Now it's a fallen angel. Buy, hold or sell?
I've got to sell on A2 Milk. So they did reiterate guidance at their AGM. However, it came with a lot of caveats and it was very second half weighted, which scares me. They're very reliant on that Daigou channel, which I think if they have to stimulate demand in that channel, it'll come at the expense of margin. And I also question whether that channel in a post-COVID world will return in the same form that what it was. I think that potentially some of those guys might go through the cross-border e-commerce channel. So I think for the time being, despite being a good brand, A2 is a sell.
Steve, the investors have been on the money. No one in China wants our infant formula from this end of the world anymore. It's been going down for a while now. Buy, hold or sell, A2 Milk?
Yeah, I've underestimated this stock for a long time, so I'm probably not the person to listen to on it, but I'm still negative. I still think it's a sell. I put vitamins and this product in the same sort of placebo boat. I don't know that it has all the health benefits that people think it has. If you have a well-balanced diet, you probably don't need to worry about it. But look, people buy the product, they like the brand. I just think that the growth has been overinflated by what's been going on in China, and that's got some huge risks to it.
Okay, the Amazon of Australia. It's also a bit of a cash cow for some of the executives. Kogan, buy, hold or sell?
I'm a sell on this one as well, so we're having a good run here. I just think it's super, super, super expensive, next level of expensiveness, and I actually struggle to sit down with this business. I'm a little bit the same with the Zero. Most of them I can sit there and say, well, I can come up with a scenario where this business grows enough to justify today's price. I find that pretty hard to do with this one. So it's all price for me.
It's been a terrific performer this year, Ben, but they've shot themselves in the foot recently with a bit of governance issues. Yeah. Kogan, buy, hold or sell?
I think it's a sell as well. They've played the e-commerce boom fantastically and they've been in the right spot at the right time. They haven't done the right thing by shareholders, and I think that while everything's going well, those shareholders are forgiving. In 12 months' time, when we're comping some pretty serious growth from COVID, I think that those shareholders will be less forgiving. So I don't want to be there. I think it's a sell. Stock
of this week: big tariffs on Australian wines. Treasury been smashed. Buy, hold or sell?
Look, I think Treasury's a sell as well. I questioned whether the market was overreacting because about 30% of, the growth driver in Treasury has been the Asian business for the last 4 years, and China's been the bulk of that. There's going to be a huge inventory washout that comes from this, and I sort of remember the Treasury from 10 years ago where they had inventory issues and they persisted and persisted and persisted, and I just think that's going to weigh on the stock for quite a while to come, so stick with the sell for now.
The Chinese are giving up on them. That means every Australian's going to have to buy a bottle of grains just to get them through. Treasury, buy, hold or sell.
I saw a puff piece in the paper yesterday saying the Europeans are going to get behind it as well, but probably lots of tax into Europe as well, I'd imagine, on wine. Look, I think this Penfolds brand, it is a genuine premium brand, and I think it will ultimately survive this and thrive long term. So I think that part of the business and the brand is worth quite a bit of money. Wine's a really tough business otherwise, though. You make beer, you make it, you sell it a month later, max, and you get to turn your assets very, very quickly because of that. With wine, you make it, takes a year. It's got to sit in a cellar for 10 years. The capital tied up in that business is very high, and it has always been a very difficult business, and you compete with a whole heap of people who do it as a hobby. And I learnt with my family farming that any business where people do it as a hobby is generally a bad one. So I would say hold, given the price retraction though and the quality of the Penfolds brand. I think there's enough value there to say at today's price it's worth hanging on.
There's a lot of action going on out there, but these two, they just can't get excited about anything.